BMNR, trading around $22.35. And if you are staring at that drop to $21.04 thinking it is time to sell, you are falling into the classic trap that separates the wealthy from the crowd. The headline story today is not the crash. It is the fact that Cathie Wood and ARK Invest have just confirmed a massive buying spree in crypto equities, specifically naming BitMine Immersion Technologies alongside the AI giant CoreWeave, which tells us this is not just a dip buy, but a structural shift in how the biggest players view this asset. You have to understand the macro thesis here, because Tom Lee from Fundstrat has officially declared that the traditional 4-year halving cycle of boom and bust is dead, meaning the expectation that 2026 must be a crypto winter is a false narrative that is shaking weak hands out of their positions. What we are actually witnessing is the birth of the 5th-year supercycle, where the current crash is simply a final flush of leverage driven by a record-low ISM index designed to reset the market for massive institutional adoption. BitMine is currently priced as if we are entering a recessionary crash, but if this 5th-year thesis holds true, the stock is drastically mispriced and poised for a violent repricing as the market pivots from fear to structural growth, making this likely the last opportunity to accumulate at these levels before the narrative flips. You need to pay very close attention to exactly what ARK Invest is doing, because they did not just buy BitMine in isolation, they bought it in a specific strategic basket with CoreWeave, which is the absolute leader in AI compute infrastructure. And this pairing is the smoking gun that validates BitMine not just as a miner, but as a critical compute infrastructure play for the future. This move aligns perfectly with the breaking declaration from Vitalik himself, who has stated that Ethereum needs to move towards heavy compute and AI integration, signaling that the old model of simple transactions is evolving into a high-performance computational network where immersion technology becomes the backbone. By buying BMNR right now, Cathie Wood is effectively betting that this company's immersion technology is the infrastructure layer for the next generation of high-performance crypto and AI networks, positioning it at the intersection of the two fastest-growing sectors in the global economy. This is a validation of the technology that goes far beyond the price of Bitcoin or Ethereum on any given day, and it suggests that the smart money sees BitMine as a hardware necessity for the future of the internet. When you combine Vitalik's pivot toward heavy compute with ARK's investment in immersion technology, you start to see that the crash in price is completely disconnected from the explosion in fundamental value, creating a divergence that is historically the most profitable setup for investors who have the courage to buy when the screens are red and the sentiment is at rock bottom. We have to dismantle the fear, uncertainty, and doubt that is plaguing the headlines because the media is screaming that Vitalik is dumping and that BitMine has lost $5 billion. But when you actually look at the on-chain data, it tells a completely different and incredibly bullish story that nobody is talking about. The reality is that Vitalik sold only 704 Ethereum, which is less than 0.3% of his holdings, primarily for charity and operational costs, while in the exact same period, BitMine aggressively bought over 117,000 Ethereum. The ratio here is staggering. For every single Ethereum Vitalik sold, BitMine bought 166, creating a massive supply squeeze that is removing liquidity from the market and setting the stage for an explosive move up when demand inevitably returns. You also need to understand the financial engine driving this company, because BitMine is currently sitting on $6.6 billion in unrealized losses with an average entry price of roughly $3,650 per Ethereum, and instead of capitulating, they just bought another $40 million worth using a fresh wallet. This confirms the pot-committed theory, which means BitMine must defend the price as the buyer of last resort, and buying the stock at $22 is essentially taking a leveraged bet that Ethereum will reclaim that magic number of $3,650. If Ethereum hits that level, that $6 billion loss vanishes from the balance sheet and the stock effectively transforms into a massive, profitable treasury, meaning you are buying a coiled spring that is being mechanically compressed by these temporary, unrealized losses. We have the catalyst that could trigger this entire reversal as early as tomorrow, because while prices are crashing, Senate Democrats are holding closed-door meetings to restart the Clarity Act, and you must understand that regulation is the gateway for trillions of dollars of institutional capital that cannot touch unregulated tokens. As a U.S.-listed and compliant company, BitMine is a safe haven for this institutional money, and the current crash is likely the final opportunity to enter before regulatory clarity reprices the entire sector overnight. We have a very clear technical battle plan for trading this upside, starting with the Green Day strategy that focuses on the floor at $21.04, which is the line Cathie Wood and Tom Lee are effectively defending. And as long as the price holds above this level, the supercycle thesis remains completely intact. The trigger for you to watch is a reclaim of the intraday moving average at $22.76, which would confirm a V-shaped recovery is real. But the true moonshot signal is a daily close above the daily moving average of $23.56. Breaking that level would shatter the bearish trend and open the door for a run back to previous highs of $161 and beyond, proving that this crash was nothing more than a trap for retail sellers. The fundamentals from Vitalik's upgrade, the financials from BitMine's accumulation, and the smart money moves from Cathie Wood all point to one direction, which is that the fifth year is forming. So do not let the red candles fool you into selling your ticket to the next phase of this market evolution. In my professional opinion, the current market dynamics surrounding BitMine Immersion Technologies represent a textbook case of cognitive dissonance, where retail panic is blinding investors to a generational structural shift, effectively creating a massive arbitrage opportunity for those willing to align themselves with institutional capital. The prevailing narrative that we are entering a crypto winter because of the 4-year cycle is being systematically dismantled by the data, which instead points to the emergence of a fifth-year supercycle, driven not by hype, but by the convergence of regulatory clarity, technological maturity, and industrial-scale adoption. When you look at the BMNR chart and see a terrifying drop to the $21.04 level, you are not seeing a fundamental failure. You are seeing a liquidity flush designed to transfer assets from weak hands to the strongest players in the room, evidenced unmistakably by Cathie Wood's decision to load up on BMNR alongside AI infrastructure leader CoreWeave. This specific pairing is the tell. It confirms that the smart money no longer views BMNR as a simple Bitcoin miner, but as a critical compute backbone essential for the new Ethereum roadmap that Vitalik just unveiled, which prioritizes heavy computation and AI integration over simple transaction speed. Furthermore, the bearish argument collapses when you analyze the balance sheet behavior of BitMine itself. The fact that they are aggressively accumulating Ethereum, buying 166 ETH for every one ETH Vitalik sells, while sitting on $6.6 billion in unrealized losses, is not recklessness. It is a calculated defense of their $3,650 break-even level, creating a pot-committed scenario where they act as the buyer of last resort. This creates a hard floor for the stock because their solvency depends on defending the asset class. And with the Senate Democrats quietly restarting talks on the Clarity Act, we are likely days away from a regulatory green light that will flood compliant U.S.-listed entities like BMNR with institutional liquidity that is currently sidelined. Therefore, betting against BMNR at $22 is betting that ARK Invest, Tom Lee, and the entire Ethereum ecosystem will fail simultaneously, whereas buying here is simply recognizing that the crash is a temporary mispricing of a regulatory compliant, cash flow positive infrastructure giant that is effectively a leveraged call option on the inevitable recovery of the entire digital asset sector. The asymmetry of this trade is staggering, and I believe looking back at $21.04 will be comparable to looking back at the bottom of the 2020 crash, a moment where the data screamed buy while the headlines screamed sell.